Good turnaround Tuesday, everybody. How are you? Hi, Alexander. Paul, how are you? Richard, I sure hope you feel better and fast. Hi, Jays, how are you? Gorkum, how's it going? Okay. So, I just want to start off with gold. Hello, Alex. Nice to meet you. So here we were, the turnaround Tuesday trade last week was a short in gold up here from 73. And what I was saying is that bull should wait for a test of a breakout to try the long side. There was no way I knew that we were going to negate the breakout. I did think that we would have a test of it. And I think this is a negative sign in gold. And isn't it funny and ironic at the same time that Powell is a hawk all of a sudden, and gold didn't like his renomination, also kicked the dollar higher. Okay, so this was last week, and then Blake and I talked about the breakout in silver being negated back under this neckline here. If this was a breakout, it was negated, it was a false breakout, and here we are. I think you could wait for this. Okay. And what I'd like to do now is really give a, hi Ryan, a tip of the hat to my friend Jim Welsh. And you could follow his work on tradersummit.net. And I heard an interview Jim did a couple of days ago, and his call was one more high towards 4740 in the S&Ps to complete. So he was off by 4 handles, and he's looking for a 5% sell-off here, which would take it back to previous highs back here. So when you go to tradersummit.net, I've been reading Jim's stuff for decades. I sent Jim's stuff to the team for, I don't know, 2-3 years, and they liked it enough to feature him on Trader Summit. So order his letter. Okay, Paul, how are you? And that's about all I have to cover. Dollar's still grinding right here. And still long euro from yesterday, right around here, and it's still diverging. There could be some kind of squeeze. I still think there could be a squeeze. And Ryan, what are you thinking here? And Stel, yen had a big surge with the renomination of Powell that ended up being a market-moving event.
Yeah, yields took off again.
Yeah, and
they're up again today. I think we've got a potentially very significant move in dollar yen. Do you want me have a crack and share me chart?
Sure.
I can do that. Let's have a go.
Yeah. And even getting a little pop in, I noticed in the USD1 with the little bit of risk off happening that we talked about. But I'd say probably the star was the Mexican peso did pretty well. People are showing the Turkish lira collapsing today too. All right, so nice.
Yeah, so it's the reason it's significant is because we had this big level up here at 1450. You know, it's not an exact number, but that's the area. And you know, we've tested it up to it, and you know, mooched above it. And that first test, as you can see on that 15-minute chart, you can just see in the corner there. Yeah, this is the first sign we've got that's held as support this morning. And obviously we're back up to 115 now. And you know, all big levels start with a little move like that. You know, most of them do. Every level you look at, you'll have a little tiny moment on a 1 minute, 5 minute, 30-minute hourly chart. And then that sets the tone for the moves and the levels you get on these big long-term weekly charts. So if we found a base here at 114.50, then this is if that becomes really solid, then you know this is going to be 116, 17, 18, maybe even more. So that is the big, huge level now. If we find support at this 1450, we potentially going to take another big leg up.
Okay, very nice look. Do you have anything at 16.5?
There's just little bits and pieces. I don't know if you can see my mouse pointer. So we've got some tiny little bits here: 1540, 1560, 70. Then as we get into 1630, little.
Oh, those
little
lows.
Yeah, just a little bunch of lows there, which I'll start drawing more lines on if we get up there. But really, it's potentially small stuff. This is the break. I mean, look how long we've been in that range, or we found that level at 1450. These are the ones that make or break the next trend.
Nice call too, Ryan. I know you're still long this thing. So good patience. Ryan, what I've noticed since you've been here, something that a lot of people have trouble with, you can make a good call. That's great. You can make a great trade. That's even better. But a great hold is really one of the most difficult things for traders to do.
Yeah, we talked about it last week in the room a lot, and it's really a negative thing for people, especially who are on US brokers, where you can't do what we call the slice and dice. So here in the UK, I can get in a position, I can take pieces off it as we move. I've done it with dollar CAD. I've got in at 125.10, and I'm still cutting it now at 127.30, just taking little bits off as the price moves up. But you can't do that in the US, and it's for a country that's so hot on regulation and protection, not being able to take profit when you can is a big negative, in my opinion. That stops a lot of traders from sitting in a trade and letting it go. I've got absolutely no risk, no psychological worries about dollar CAD at the moment. I'm locked in. It can go where it likes, and I'll manage it with trading stops. And there's no pressure, but you can't do that in the US. You're always under pressure. What do I do with my game? What do I do with my game? And I think
and it's first in, first out. That stuff too. Yeah,
terrible. It's really terrible.
It's like it's not a free market. You have handcuffs on you.
Yeah, exactly.
Okay, well, let's all move.
Yeah, come over, Dale.
Get that bedroom ready, Ryan.
Yeah, I'll put you up, mate. I've got a big garage.
All right. Cool. Well, we could even have our band in there, do a little garage band stuff. So, Stel, how are you today, buddy?
Good morning. It's slight cold, but I'm fine.
Okay.
Yeah, all good. So,
do you want to take the chart back over, or the desktop back over?
We could. Yeah, I guess I could do that. Blake will probably be in here in a sec. Maybe, Stel, you have anything to show? My show chart.
Yeah, nothing major. Let me take it. Okay, hold on.
All right.
Get the pawn off.
Nice. So basically, the markets actually seem to really like the fact that Powell is continuing. The biggest dove in the history of Fed central bankers, but still, it's probably better than Brainerd or whoever else. So exactly. So the dollar keeps going. I really thought it would be holding somewhere around 96.10, but I guess the market was a bit short, and it just carries on. And now the question is, as I said before in last week's webinar, is what is the market pricing versus what can the Fed deliver? So what's the market pricing in terms of dollars, in the terms of the US, and in terms of, say, the ECB? And there's a lot priced into the Fed, and very little, actually nothing priced into the ECB. So it's becoming a little bit of a skewed bet now to be long dollars, but obviously it's been a very good run. And if you have been long dollars, it's much easier to manage it now. But it keeps going, and annoyingly, obviously the first thing that gets hit is metals, and I don't like that. But you know what? I've been saying for a while, we're not out of the woods. We, as in metals bulls. I did say, I have just under half the position I want, and I didn't take it to full because I was fearing that something like this would happen. And look at this, silver down almost 3% today. So this is just capitulation. There's no other reason for them to be crashing like that. And but they are, gold and silver are always the first to react. They are, we know it. So I'm now waiting. I think gold can easily retest these lows here, 1685. We could get there. It sounds like a long way from here, but we really could. Look, looks like it's been a false breakout, and that's not good technically at all. Yes, we're at the I think that's the 200 daily moving average. Yes. So we have this as a kind of support, but the way things are going, it could carry on. And so I'm not doing anything before 1685. And silver is also not looking good. And I think we could easily retest this 21 and a half range, where I'm going to add there, I think more. I was thinking before maybe I would wait for 19s or something like that, but hold on a second. Sorry, I'm not going to answer that. So, I'm waiting. I'm waiting to add. I said before, I'm either going to add lower or on a breakout higher. Well, chances are rising that I'm going to be adding lower. And I'm perfectly happy with that. So at the moment, metals are moving, and yields are moving a little bit as well. Oops, sorry. No, that's not it. There we go. Yields are moving, but again, in the grand scheme of things, this is just still noise. Last months, we're going between 110 and 170. Yes, we're closing into the high side, but of this range, but still, for me, it's still noise. So until that moves substantially, I don't think we can expect any kind of correction in equities. I mean, look at it. People are talking about the S&Ps and equities trying to sell off today, but really look at this chart. I mean, that's it's bullish. End of story. So. I'm still waiting. Is the main point? I'm still waiting for yields to go higher for me to actually change my mind on equities, on everything else. So that's pretty much it. Sorry about all these Skype notifications. I don't know, are they showing up here or not?
They are not.
They are not. Okay, good.
No,
good.
If they were, I would be popping in there saying hi, Mom.
Yeah, good. Thanks, Blake.
You know that.
Hi, Blake.
Hey, good morning, guys. How are you?
How are you, buddy?
I'm good. I actually just so you know, I've closed out all my dollar longs as of yesterday. I closed out my euro short, and then I went. I kept the dollar Mex, dollar Canadian, dollar Rand longs up until about an hour and a half ago. So, I think the dollar is at risk of possibly pulling back a little bit, but at the same time, I wouldn't want to be short the dollar. How many people are keep trying to short the dollar and thinking it's the highs, and then it just continues to run over them. And I know. I'm sorry, I'm just popping in a little bit late. Have you guys talked about the Lira this morning?
No, we haven't.
Oh my God! What? So yeah. What? Okay, so why is the Lira up 13%, or was anyway? Or let me take that back. The Lira was down 13% intraday. So look at this move. I mean, this is just. I don't even know where we're going to go from here. So, what do you guys make of this move, and why did we move this aggressively?
Dogum was out overnight again.
I'm sorry, what?
The famous economist Dogum was out overnight stressing how good he is at economics and how he's going to stick to his current policy.
Okay, so
there's no elections coming anytime soon.
Oh well, that sucks.
Yeah.
Well,
I'm surprised it's not 20.
And Stelios, you and Steve have talked about this a little bit as far as the day it reverses is the day that Erdogan's out, right? And
well, so theoretically, yes. He's been sorry to interrupt. He's been very he's one of those presidents who's very hands-on with everything. And whenever you have somebody interfering this way, monetary policy and, in general, the economic situation, it cannot be a good thing, right? So I'm not saying that whoever replaces him, and I'm not an expert in Turkish politics, obviously, but I'm not saying that whoever replaces him is going to be a lot better, but it's definitely going to be a sigh of relief, I think, for markets and for the currency. So my view is that elections are in 2023, I think. Maybe a few months before, when things start looking like there is a chance that Erdogan does not stay on. I know, famous last words, dictators stay on forever, but if I can call him that. But as soon as the market kind of thinks that there's a chance he's not going to be there, I think the Lira starts taking off.
Good luck being able to trade it, though. That's the problem.
Yeah.
I mean, seriously, this is a crazy move, right?
Yeah.
I mean, look, we just hit the 361% extension. And I mean, that's just nuts, right? In general. I mean, I don't even know what to expect out of here. So what would you be doing with the Lira right now?
You can't tick it. You can't use ticks on this. You can't even trade it. You go to a broker and see if they're going to quote you a decent spread in the first place. But a lot of brokers, they switch it off because it's too volatile, margins too big. It's you sit back and watch this with a popcorn rather than try and trade it.
Our friends, sorry to interrupt. Our friends are saying very rightly that inflation is a problem in Turkey and it's running at huge numbers. And comparing it to Venezuela's stock market was just going.
Stelios, you're breaking up a little bit, bud.
Sorry, I don't know what's wrong with my internet. Can you hear me now?
You're in Greece, that's why.
Yeah. No, I was just saying that I don't want to compare, with Venezuela, but remember when Venezuela with 1,000% inflation, their stock market was going through the roof simply because of inflation. So inflation is a problem, not at those levels, but it is a big problem, and that's also pushing things.
So is this the like next Argentinian peso?
I don't know. Could be.
I mean,
I really don't know.
I mean, look, if I had to look at the charts, like what the Lira looks like right now, but I'm just, I'm going to throw this out there really quick, and then you guys can.
Wow.
If I had to say, we're right here, right?
Yep.
And I mean, we're right there, and here's the Lira right now, right? We're somewhere in the same vicinity. I mean, I know how, for those of you that can trade it, you got to be really careful. I just, this is one of those things. Now, I was long the dollar Mexican peso last night. And by the way, if you're, if you use the ForexAnalytix platform, just, especially those people that are on the light version, you're not in the chat room, so you don't get to, look at our conversations that we're having in the chat room, but you still use the mobile app and you still get this type of stuff. We put in a bullish pattern in play yesterday because it was going to break out. I mean, we were breaking out above the 20. I mean, it looked like we were going to break out. So we broke above the big 618 retracement. I figured we were going up here to the 2120 level. We're stalling at 2120. Now, this is 127% extension of this last move lower and the 78% retracement of this entire range. You guys know I'm bullish, and I do think the dollar Mexican peso is going to see, we're going to see these levels. I don't know what that is. We're going to see these levels sometime in the coming months, not necessarily today, but we've had a nice move today. So you have to be a little careful with, the dollar mex as it is. And that's why I took that position off. Also, with the dollar rand, similar type of move. I was long this overnight. I just took some profits. I'm going to get back in on dips. This is a big inverted head and shoulder pattern, but these are playing higher. The point I want to make here is these are playing higher and stocks haven't even moved down yet, really. I mean, yesterday we got a little bit of a move lower, a little knee-jerk reaction following, the Powell getting his or retaining his job at the Fed, and he's obviously going to be confirmed. I don't think anybody will stand in his way. And we were having a history lesson as a group, and I could have sworn Alan Greenspan was the Fed chair as I stepped in to trade. I started trading in 96. 95 is when I started in the business, but he was Fed chair. I, for some reason, thought he had, in my mind, I didn't know he was actually Fed chair from 87 to like 2000, whatever year, 2006, 2005, 2004, 7, something.
The maestro.
What's that?
They called him the maestro.
Yeah, I mean, I thought for some reason he had like left the post and then came back, but I was mistaken. He'd retained his position. Here we are. We got Jay Powell, who's going to retain his position as the Fed chair, and the market gave us a false breakout to the upside and then reversed yesterday. We're still above the 46.25 level, which right now I feel, well, there's two levels of support for the S&P. The 46.25, which is a flag support. You can see the bull flag pattern. After that, it's just the big breakout point at 45.50. As long as we remain over those levels, I think you have to remain bullish, but I must admit, you have to be a little careful here as relative strength is working off those overbought conditions, which is fine. That's normal of a bullish trend. You get overbought, you work them off, relative strength, does one of these, we get back to mid-range, right? Once we get back to mid-range, stocks pull back, then we get back to, some level where it's, bulls, and just want to take it back up going into the end of the year, that type of thing. So I'm not worried about the stock market currently. I don't think it's bearish. I think there might be a risk of a bit of a pullback, but it's not like anything that's going to disrupt the trend. Do you guys, and the thing I wanted to mention today is, do you see any risks to equities right now with Jerome Powell taking the helm again?
Yes.
Well, theoretically, with the dollar rising, equities should be falling, but they're not. But as I said before, with yields here, I don't see any major risks. I don't know what Dale thinks. Sorry, I interrupted you.
Oh, it's okay, buddy. I just think that Biden probably had a talk with him, and we do have midterms. So if I were Biden, I'd want to get any kind of stock market correction or the taper out of the way sooner rather than later and have the market falling into the fall. Get it over with and have it coming back into the elections. Maybe they cut a deal.
Yeah, I don't know.
Mr. Conspiracy. Why would he renominate him during the during a taper?
I can give you a couple of reasons.
I knew you could.
To be honest, my assumption was that he would choose Brainerd over him because she's a woman, and we know that this administration loves. Yeah,
woke.
But if you think about it, the stock market is sailing, right?
Yeah.
And in my opinion, they didn't want to take the risk of stirring the pot. I think that's reason number one. Why interfere with something that so far is working as intended, right?
Well, because Steve, you can't. If you're President Biden and your approval rating is as low as his is, he can't take the risks on disrupting the stock market either.
Mm-hmm. Exactly.
Right.
Exactly. Now, the second reason is the following. If you think about it, if he put somebody in charge of the Fed that is a different person, so would be assigned completely to the current administration, it means that if and when things go wrong, you can't really blame the Fed for it. because then they're going to tell you, but the Fed is being run by the person you appointed. It's much easier turning against the Fed if the need arises, if the person in charge is somebody that you found there from another administration. I think these are the two main reasons.
Yep, political excuse number one. It's a fault of the previous administration.
I don't disagree with that.
Yeah, makes sense.
Yeah. So, hey, good morning, Steve. Glad to have you.
Steve, good to hear you, man.
Let's turn, since you're here, and I wasn't sure you were going to be here. Let's turn it back over to the Lira. What do you think here with this big move that we're seeing today? And we were having a conversation. I don't know when you stepped in.
No, I was here. I listened to it.
Okay, so what are your thoughts?
I think there's going to be no respite to the Lira. There's going to be short periods of pullbacks, because mean reversion at some point has to happen. But I think things are going to get a lot worse before they become better. Just imagine. The Lira has lost since 2008, the financial crisis, 91% of its value against the dollar. Just think about that. We're talking about a period of 13 years. So, for people that think that it can't get worse, of course it can. We're talking about a currency that has lost 91% of its value in just a little bit over a decade.
Well, you guys being Greek, and I know you have wonderful relationships with Turkey. If anything, maybe you can take them over financially as their currency gets destroyed, right?
That is actually not the right assumption, unfortunately, Blake, because you know what the problem is. When your economy is doing really lousy, you want people to have other things to talk about and consider. You need to distract them. And one of the ways to do that is create some kind of a conflict with your neighbor. So trust me, first of all, I have a lot of Turkish friends, and I have absolutely nothing against Turks in general. Second of all, I think it's for the best interest of everybody if Turkey is doing well. So I really hope that this period comes to an end by 2023, so they can finally get a proper economy, an economy that they deserve. I've talked multiple times in the past about the potential for the Turkish economy to flourish. It just needs the right political leader to do it.
Yeah, well, we'll see if that can happen. Obviously, there's no elections coming up, as the guys mentioned earlier today. Hey, let's turn our attention over to the dollar yen. The dollar yen is reaching the 115 level. Ryan, you follow up with the ForexAnalytix community. As far as where the options are all at. If you go to the ForexAnalytix page over in market info, you can see where all the orders and options are at for all the market. With the dollar yen, we're trading up near 115. How do you feel about it up here? And I think K-Man's in here this morning. I wanted to see if he would mention anything regarding the yen. So before Dale has his interview in a few minutes, do you guys have any opinions about the yen and what we're doing here at 115?
We were speaking about it right at the beginning of the interview or the webinar.
Sorry, I missed it. We were
that's all right.
We were kind of dealing with an email issue. So what I'm sorry, and we got more people listening in now that weren't listening in earlier. So what are your thoughts on the yen?
Yeah, just give a quick brief. There's a potential very strong signal that we found support at 1450 this morning. This, after all the power stuff and the moving in yields, it's the big, massive long level. 1450. So the fact that we found a bit of support there even on a 15-minute chart could be really significant, and that could propel us higher, 118s, maybe more.
And so we got a lot of support here on the dollar yen. K-Man, are you in?
Yes, I am.
Hey, so what are your thoughts here? Because I want to. And for those of you, that don't know, K-Man, you traded on the yen desk for so many years, and you lived in Japan. What are your thoughts with the dollar yen at these levels? We're just maintaining this bid around 115.
Yeah. So a couple of things. Yeah, we had the one since the 114.5, we came back to down to 112.70, 75-ish. We were
Right.
all trying to buy at 112.5. We didn't get it, but so we paid up a little bit. Then now you're going to 115, very close the other day, came back down, dropping down because risk wasn't feeling too well. Also, oil's coming off. So the yen caught a bit. We had this acceleration down to 113.5, and now we are like very easily back to 115. In the meantime, early last week, we had this Kishida supposedly saying that he was looking at the yen level for it not to make it too expensive for the energy importers, because Japan is importing a lot of energy. So people thought that he was talking about the yen, but in fact he was talking about those oil reserves, really. So I think it's very easy to come back here. I wouldn't be surprised that we end the year higher in dollar yen. I'm overall already dollar bullish into year end. I think there's a risk on the December meeting that the Fed may accelerate. The next few months may accelerate the tapering of QE. So I'm still bullish on the dollar yen as long as we hold, broadly speaking, those 113, 114 levels now. I think it's, yeah, we could just go higher. Recall like weeks or a few months ago, weeks ago, I said we could see 120, 125. Why not? It is possible, especially now that the US, Japan, China, UK released the oil reserves. The OPEC Plus boys and girls will be ready to cut or at least not to hike more oil production and output.
And
let's not forget that Japan is also compiling a new stimulus plan for, how much is it? Like $300 or $500 billion or so. It's all going to add up. Corona is not going to touch rates either.
That makes a lot of sense, and I think that does open the door for higher currencies against the yen. And one thing that I know you mentioned it, and I guess we should mention it before Dale takes over really quick. Yields are also moving higher, and we were talking in the Forex Flow chat room in the ForexAnalytix community room today, just about the lower end of the yield. We might start to see that flattener here on the 2s and 5s and 10s. You can see the big moves on some of the lower end is flattening against the 30, and they could go inverted soon. And what happens when you get an inverted yield curve? It's usually not too good, right?
If I may quickly add, usually that's yen bullish, flattening of curves.
If it flattens, right? Or if it inverts.
And it's not today. Usually that's rather yen bullish, flattening of curves.
But that would be because once it inverts, if it starts to really invert, it would suggest that we are looking at a potential recession. So you might see the yen strengthen as a result. Is that correct?
Yeah, but it's even the flattening. It's not happening, and it must have to do with the global low yields, and now the prospects for the dollar yields are better than whatever happens in yen land.
Interesting. All right. Well, K-Man, thanks for all your time. We've run over our time. Stelios, Ryan, Steve, Dale, I don't want to take up your guest time. So thanks everybody for joining our team. Dale, have a great interview.
Cheers, guys.
Hey.
Thanks, everybody.
Bye-bye.
Thank you, guys. Kenny Polcari, welcome to F.A.C.E. Thanks for your patience. I'm looking
Thank you
forward
for
to
having me.
Hey, it's great to be able to talk to you, Kenny. I followed your career for quite some time. If you want to show the camera, show your mug, you just click the start video, and I'll be there with you.
Oh, there it is right there. Okay.
Yeah.
Perfect.
Okay, Kenny, there you are.
There's my mug.
There you are, another guy with wisdom, all this gray hair. I have a little more hair than you, though, buddy. But anyway, great to meet you. You know, I followed you on CNBC for many years. You've gravitated over to Fox business, huh?
I have. When I moved down to Florida, there was an opportunity to come to Fox, as well as there was some changes going on in the whole industry, right? At CNBC,
Yeah.
it went more. They changed the lineup. They got much more diverse, which is great, and
Yeah.
they had to make room, right? So there's just moving around. That's all.
Yeah. Are you sure they didn't
But I
see your ballot and who you voted for?
I'm not sure if they saw my ballot or not. One way or the other, it is what it is. I do a fair amount on Fox Business on Charles Payne and
Yeah.
Stuart Varney
Yeah.
and Liz Clayman. So it's fine by me.
Yeah.
I enjoy talking to the markets. I enjoy talking about the markets. So whether it's CNBC or Fox Business, I'm talking about the market. So that's what I care about.
You know what? When you're making money in the market or you're losing money in the market, it's not red or blue.
That's
It's all
right.
the same, isn't it?
It's exactly right. So what difference does it really make? But people feel passionately one way or the other, and that's what makes a market as well.
Yeah, and there's definitely a lot of passion if you could go out and buy a Trump SPAC and then quadruple your money on a day trade.
Yeah, you're right.
Well, I mean, what do you think of stuff? I mean, Kenny, you and I have been around for, a decade or so in the business.
Right.
And have you ever seen it?
Oh, that's good.
Yeah. Have you ever seen it be so easy for amateurs to make money in the market?
Not the way it is today, not the way it's been. And my fear is that, there's a whole generation of people behind us that know nothing other than zero interest rates, because for the last 12 years, they've basically been zero and the Fed's done nothing but pump, pump, pump. And so they only know one way, right? They haven't actually seen what the other side looks like. And my fear is that when that happens, it's going to get ugly because they're not going to understand it, and it's going to be a tough lesson, right?
Yeah, well, if they just went to sleep during COVID, they missed that 3-week bear market.
Yeah.
So, anyway, so what you're talking about is something prolonged. Anything in the back of your head that could turn this euphoric bull market, liquidity, the TINA around? You think it'll be Paul's renomination and
here's what I think. So here's what I think is going to happen. Now that it's clear, Joe Biden made it very clear now that Jay Powell is going to stay at the helm. Lael Brainerd is going to be elevated, so her position is going to increase. She's probably going to start to focus, in my mind, on the crypto world and how the Fed's going to navigate cryptocurrency. But that being said, I think the narrative that Jay Powell has been telling everybody that, inflation is transitory and no need for everyone to get nervous and we got it under control, blah, blah, blah. I think that's going to change now. And I don't think it's going to change in December, because I don't want to see the market have a repeat of 2018 when it sold off 18% or 16% in 4 weeks. I think they want to maintain through the end of the year. And then when January comes, I think that's when you're suddenly going to see the tone of his remarks get more hawkish. That doesn't mean he's going to go way right, but he's going to go from the left side. He is going to come moderate to probably more of the right side in terms of talking about tapering, talking about real interest rates increases and the need to fight inflation. That's when I think you're going to see the tone change. And when that happens, that's when I see you're going to see a repricing in the market. And it doesn't mean panic and, oh my God, throw everything out the window. It just means understand that that's what's going to happen and then position yourself accordingly. And I think you started to see that. Every time the NASDAQ gets hit, NASDAQ is the key barometer there, because it's going to be those names are going to be the first ones that asset managers and traders go to try to raise money, because they've been so exaggerated moves to the upside that it's almost free money, right? So they're not going to sell Coca-Cola and Johnson & Johnson and Procter & Gamble, because they're big Americana boring names that pay a good dividend that would be defensive. Certainly they'll come under pressure, but not the way Spotify or Tesla or Shopify or any of the other ones are going to come under pressure. And I think that conversation is going to happen in January. And I think that's when you're going to start to see kind of a broader change in the tone of the market. I think he's going to try to control the narrative now through the end of the year.
Okay, I was surprised. Everyone, our bailiwick is currency, and I'm sure as a trader, you follow dollar action because the dollar could be a wrecking ball at times if it's too strong, right?
Right.
So,
Right. And look what the dollar's done
yeah,
over the last,
and the market's been fine. The market's been fine with a strong dollar all year. Right.
Well, and it's gotten stronger over the last. Let me just see.
Right.
I'm just looking at the chart now. Over the last, since October, the dollar's
Right.
gone from 92 and a half all the way up to 96.44 where it is now. I think it's
Yeah.
on its way to 98. I think that's where it's going to find some natural resistance.
Okay.
But I think that's going to begin to take its toll. I think the dollar action is telling you that rates are to move higher.
Okay. So it's about rates. Anything that could turn the dollar. I know Ray Dalio thinks that Paul's going to start the taper and not be able to finish it and reverse. Do you think that's a possibility?
No, see, I think it's an interesting observation. I don't see it all. I actually think he's going to start the taper, and in January he's going to increase the pace of the taper. Because look, Jimmy Bullard, who is the St. Louis Fed president, who is currently not on the FOMC committee, is going to be on the committee starting in January when they have that, when some members come off, some members go on, right? It changes the complexion of the committee. Jimmy Bullard was out, 2 weeks ago, he came out and he absolutely said that Powell needs to start the taper faster and raise rates sooner to fight inflation. And I think that's why there's going to be more, because then Esther George is also going to be a new name on the FOMC committee. And she's also in the camp of being more hawkish than dovish. And so therefore, I think the tone is going to take it on. Now, the only, I guess, saving grace we have is that there are 3 empty spots for Biden to nominate 3 new candidates. Now, while they may not be on the FOMC committee, they will be part of the Fed. So their opinions and thoughts and theories will be part of the conversation. So that may temper it a little bit, but I don't think there's any way that Ray Dalio, and I respect Ray Dalio, I just don't see how they're going to start the taper and then stop the taper. I just don't see that.
Everyone's really embraced the melt up here. And this is a little different December, don't you think, Kenny? Because people, normally they harvest their losses, they do tax loss selling. But, with potentially higher taxes coming down the road next year, could this be a different December where people say, I'm just going to go to the door because of the uncertainty of perhaps higher taxes?
It could be. I think that is certainly part of the issue. I think that's part of the Elon Musk Tesla issue too. That he started selling all that stock, kind of thumbing his nose at them, saying, "You're going to try to take more money from me next year. I'm just going to sell it this year, and I'll pay a lower rate." I mean, if you want to call anything he pays at a lower rate, but one way or the other.
What he gets at a low rate is the government financing he had for 20 years.
Yeah, exactly right. But you could see as we move into December that attitude that you just said, that people say, screw it, I'm going to just take the hit now instead of waiting to see what happens next year, right? So we could see that as we move into the last couple of weeks of the year. So far, I haven't seen it so much yet, but you could, especially if people are thinking that the market itself is going to get weaker because the Fed's going to change policy, so the market's going to get weaker on its own, so they're going to try to get out ahead of that as well. Okay.
So looking at different sectors, Kenny, are there ones that you favor that are unloved right now? Or, are there any, for example, the miners are taking a hit with gold and silver because of the renomination. At least that's what reporters say. That's the reason they're going to give. Oil has been a pretty good performer.
Oil's been a great performer. It's up 46% this year. I think consumer staples, which is a real laggard this year, right? Consumer staples are only up 7.5% on the year, when the rest of the sectors, right? Oil's up 46%. Retails are up 60%. Basic materials up 45%. Real estate's up 31%. Consumer staples have been really underperforming. And if you're in the camp that you think it's going to get tough next year, consumer staples are going to be a defensive area that, because they're staples. They're stuff you need every day, right? You need soap, you need shower, you need shampoo, you need, detergent, whatever. You need Q-tips, you need toilet paper. All that stuff you need every day are consumer staples are going to provide, I think, a defensive play if you're worried about next year. So I'm in that camp. So I like the consumer staples for next year. I like financials. I continue to like energy because I think energy, right now it's, we're seeing this weakness, but I think that's baloney. I think energy is going to start to surge again, and it's going to, make its way towards $100 a barrel. Look,
Okay, so what? Okay, so what about what is really in the public's eye is the shortage of semiconductors, and
right?
I heard the DEA made a bust where they found 20 semiconductors buried in a few pounds of cocaine. So I was wondering if you think these supply chain issues are going away. They don't look transient to me. Maybe that's what's holding people back from buying staples is being able to get almost everything we have here is made in China, Kenny.
Yes, I understand that, which is a whole nother problem, how we've put ourselves at risk. As a matter of fact, there was an article today, I don't know if it was in the Journal or where I saw it, the Journal or on Bloomberg. Some companies, some U.S. semiconductor companies building a big plant in Texas now to produce semiconductors in this country, so that we get off of that dependence of whether it's Taiwan, China, Vietnam, Hong Kong, wherever else they're making them. They're going to start making them down in Texas. It was a big story. I got to see where it was.
Okay, and I think didn't Intel's putting in a huge plant in Arizona.
Right, and so they're starting to smarten up. These guys are starting to say, "What the hell are we doing to ourselves? We're putting ourselves at the mercy of China and parts of Asia." For what reason, right? And so I do think from a semiconductor point of view, look, semiconductors are going to continue to be strong because the whole world is running on semiconductors. Everything you have, your watch, your refrigerator, your oven, your car, everything's got semiconductors in it. So that's not going away at all, right? So I like semiconductors as a holding, as a long-term investment, whether you pick, NVIDIA as whether you pick individual names or whether you pick the semiconductor ETF because it gives you a broad range of names. But I wouldn't be selling my semiconductors at all.
Okay.
But I do think things like consumer staples are not necessarily, toilet paper and baby powder and stuff like that is not dependent on semiconductors, right? But they are dependent on your quality of life. And they have so underperformed the market this year that I actually think that's probably one of the safe places next year to kind of have in your portfolio. You maybe want to overweight them a little bit, which is kind of what I'm doing, right? Any new money that I'm putting to work, I'm not chasing technology and the high growth names that I think are going to come in. I'm not selling the ones I have either. I'm not chasing and adding to those current positions, but I am adding to positions in the staples and in utilities and in industrial names like IBM and Honeywell, because I think those are safe places to be as well.
So are you managing money now, Kenny, or are you talking about what you're doing for yourself?
I'm managing my own.
Okay.
I work now as chief market strategist for a $1.2 billion independent RIA. I represent them when I'm out talking at conferences or client events or bringing assets to the firm on their behalf. But I'm the one at that point. I'm not the one who's managing those assets. I'm involved with the portfolio manager who does manage them, building the portfolio. But I much prefer this. I much prefer getting out there and talking to people and being kind of the face and the voice. I don't want to sit behind a computer all day long and
You miss the floor, bro?
I miss the floor tremendously. Look, dude, I spent 40 years on the floor. I went there in 1980 when I was 19 years old. Now, here we go. 1980, right after the Jimmy Carter years, right? When the country was a complete mess, right? The economy was a disaster. It was bankrupt after the Iranian hostage crisis. Ronald Reagan had just become president. They had just passed they were in the process of passing the big Reagan tax reform package. Interest rates were on their way, by the way, to where? 21%. Unemployment was going to 13% and inflation was going to 10%. So for everyone out there who says, "Oh no, you're a dinosaur, never going to happen," trust me. You know, because you lived it like I did. I was 19, 20 years old when interest rates were 21%. And anyone who had any money in the world, and the Dow was trading at 800. Last time it closed at 36,000. But that was trading at 800. If you were anybody who had any money in the world and you had the choice, you could go out and buy American Telephone and GE, which are fine American companies, or you could take your money, walk across the street to the bank and give it to the banker. And guess what? You're going to earn 21% risk-free, sleep at night, right, on your money. 21%. Think about that. Earning 21% for just doing nothing, giving it to the banker. versus you're trying to earn 21%, you know, picking stocks and all that stuff, which is great. I love picking stocks and all that. But back in 1980, you know, when the economy was a disaster, you could earn 21% of your money by giving it to the banker. And that's what people did, right? And we know that. And then
so we're pushed out on the risk curve. That was all part of QE for decades now. So do you think there'll be some problems brewing, like you know, I'm talking about retirement accounts where people have to generate 7-8% returns, and you're talking about financial repression with low rates like this, and these funds were pushed out on the risk curve to attain that there could be a problem with people counting on their pensions and them not being there?
I do think that's potentially a problem. I also am worried that, you know, once the current administration gets done with their spending programs, that they're going to look to raise more money and they're going to start coming after. And you already hear the talk about they're starting to come after, or they want to come after, retirement plans that they view as overfunded, has way too much money in them. So they want to start taking away your money that, you know, that they promised you they're going to put away. It's going to be for you. You're going to provide for yourself. You're going to help us out. Now they want to help themselves to, you know, all the things that we did. So I'm concerned on a number of levels that
market wouldn't like that policy, would it?
Market would. There'll be a revolution, I think.
How about a transaction tax?
I think a transaction tax is a bad. You mean you're talking transaction tax on stock executions? I think it's a lousy idea. Yeah, I think it's a lousy idea.
Happens?
No. And listen, the New York Stock Exchange already said to, well, if it's federal, if it's at the federal level, but when New York State wanted to impose a transaction tax on stocks in New York City, the New York Stock Exchange stood up and said, listen, we'll just pick up and leave. You know, we'll go to Texas, we'll go to Florida, we'll go to somewhere else that's much more accommodative to, right? And so I think that's going to be a tough sell. I really do. They get a transaction tax will be a tough sell because it penalizes everybody. Penalizes even you and me on a transaction tax every time, right? As Joe Q citizen, Joe Q public in this country, you're going to get penalized for everything you do.
Yeah, I don't mind making my broker rich with volume, but I sure don't want to, you know, make the federal government rich on me churning my own account. So, what about the trial balloon they floated about taxing unrealized cap gains? Who would ever carry a position? Who would ever trade?
I don't even know how you do that, because if you're going to tax me on unrealized capital gains, am I getting the deduction on unrealized losses? I mean, it's going to work both ways if you're going to do it. And then how do you actually do it? On what day of the year are you going to pick whatever you want to pick? Is it the 31st of December? Is it the 1st of December? Whenever it is. I just don't understand how they could realistically do that. And I think there'll be massive pushback on that. So I think, you know, they talk about it like, you know, as if it's going to happen, but I don't see how it could possibly happen at all.
Do you ever look at markets outside the U.S., Kenny? Because if the dollar does get up to that 98 level, they should be pretty cheap. And then you get a dollar turn. There could be some big plays next year on a resumption of a bear market in the dollar. Are you starting to think that might be a possibility?
Well, I hadn't really thought about that, but now you do give me food for thought. I do look outside the U.S. It's funny, you know, I don't look to Asia for opportunities. I look to Europe for opportunities. And I think Europe is actually going to, for a foreign market,
outperform the U.S.?
Well, I'm not sure it's going to there are calls next year that Europe is going to outperform the U.S. Morgan Stanley put out a piece 2 weeks ago where they said, avoid the U.S. next year and put your money into Europe, which I think was really, whether or not you want to call it a bold call, it was an interesting call by any stretch. I wouldn't be abandoning the U.S. at all. I would put money in Europe because I do think that they're right in the sense that Europe, I think, is going to be a safe place to put money, but not to the point where I'm abandoning my U.S. holdings or putting new money into U.S. names. But I'm not, it's funny. I don't know why. When people talk about investing abroad, my first thought is not to go to Asia. Not because I had a bad experience.
That was good intuition. That was good intuition when it came to Chinese tech stocks. They're recovering. How does China, Kenny, I want to ask you, I've asked a lot of people this. Remember back in 2008 when we were in the Great Recession, and they said China wasn't affected. They didn't have toxic paper, and they were still growing, and they were going to help pull the world out of the recession. So with what's happening in China, are you worried that if they were, they're a much larger part of the global GDP now than they were then,
Yeah.
15 years ago. Could they drag us into one?
I think they could. And I think, and that's a little bit of my fear with China as well. Not only could they drag us into one, but there's way too much risk. Like if you're anyone that's getting money, really, why would you put money into a country where they could change the rules from Monday to Tuesday? Suddenly the rules change and you got nothing to say about it. There's no debate about it. It just is what it is. Look what's happened to Baba, right? Alibaba.
Yeah.
I mean, it's a disaster. So that's why I think when there's opportunity to invest abroad, why am I going to China of all places? I mean, unless you're going to go with such a small percentage of your portfolio, so it's really it's insignificant. Okay, well, what's that number going to be? 2%? Why bother? I'd rather put my money to work where I know it's going to work, and I don't have to worry about waking up one day and having Xi Jinping say, "Oh no, we changed the rules and too bad." Right? Not doing it. I have no reason to do it, so I stay away.
Okay, Kenny. Well, it was really great talking to you. And, what's your big idea for 2022? I gotta get used to saying that.
Well, I know. Yeah, really, right? It's only 4 weeks away. Can you believe that? 2022 is 4 weeks away. It's unbelievable. Listen, I'm in the value camp for for 2022. So, like I said, those names that the sectors that I talked about, consumer staples, financials, and energy, and some industrial. So I continue to like IBM. I love JP Morgan. I love NVIDIA. Well, NVIDIA, although it's not in that sector, but I do love NVIDIA. I got to tell you something else. As much as ARK, which is Kathy Woods' disruptive ETF fund, I got to tell you, as a long-term play, you got to be in disruptive tech. So I own the ARK fund, and now it's gotten crushed over the last couple of days. I haven't put any more money to work yet because I want to wait and see how it reacts. But on a broader sense, next year I'm playing it much more. That's because it's also my style, right? I'll tend to be a little bit more conservative next year until I get a better sense of what's happening, not only in the administration, but what's happening with the Fed and what's happening with policy. So I tend to be, and I'm also 60. I'm not 20, right? If I were 20 or 30, I might have a different view of the world. But I'm 60. So, I'm on the back nine. I'm probably on the 18th hole right now, right? So I've got to be a little bit different in my thought and my methodology in terms of where I'm allocating my dollars to.
Yeah, so we're not thinking about where we're going to be in 25 years anymore.
Well, listen, where I'm going to be in 25 years is probably pushing up daisies. So,
any day, hey Kenny, any day looking down at the
85.
Hey Kenny, we'll still be talking maybe, because you know what? Any day that you're staring down at the grass is a great day.
It's a good day. Yeah, no, I hear you.
Kenny, I had a great time talking to you today. I'm so glad I reached out.
Pleasure was mine. Anytime. Thanks a lot.
And Kenny, you know what? Your ideas, I'd be watching the multinationals next year on a dollar turn.
Yeah, I absolutely agree.
And maybe we'll get back together and talk about this next year and see what's
but
evolving.
Listen, for another reason as well, because the multinationals are just what you are, right? So it gives you exposure multinationally, right? So you're going to get exposure, and they're also good dividend payers. And they're big. Some of them are big, boring stocks, but guess what? Sometimes boring is good.
Well, have a great Thanksgiving, Kenny, and save the drumstick for me.
You as well. Bye-bye.
All right. Really nice talking to you. Everyone, Kenny Polcari, you could follow him on Twitter at Kenny Polcari. And as you can see, Kenny still has a lot of energy and passion for the markets after, like me, being in the markets for 100 years.
You can get me on I take my daily market commentary that I publish on my Twitter, but I also turn it into a video series on my YouTube channel, Kenny Polcari Media, Kenny? So you can get it there as well.
Okay. All right. Well, Kenny, thanks so much. Happy Thanksgiving, buddy.
You too. Bye-bye.
All right. That's a wrap, everyone, for Turnaround Tuesday. Good hunting the rest of the day. We'll see you tomorrow. Okay. You're very welcome. I'm glad you guys enjoyed it. That's a wrap. You could join the team in 17 minutes for the morning edge. You're very welcome. We'll have Kenny back. Adios. See you, Laura, Samuel, Austin. And don't just count your pips, count your blessings. Every day should be Thanksgiving. See you, Jatin.